Did you know that the average graduate has over $35,000 in student loan debt? That's a lot of money. And for some students, they can't even fathom the idea of leaving college without accumulating some sort of student loan debt. I mean, just think about all the opportunities, all the possibilities that you can have with all that money. Now, paying student loans over time not only has a direct impact on how much money you have left over when you get your paycheck, but it has a direct impact on your credit. And learning different ways on managing student loan debt can not only free up some time and some resources to get a better hold of your finances, but it'll help you build a really strong credit report. So let's talk about the pros of student loans when it comes to your credit. I can't emphasize the importance of you guys paying your bills on time every single time. As a matter of fact, 35% of your credit score has to do with just that, payment history, or your ability to make payments over time. In a nutshell, the more you pay your bills on time, every time, the better it's gonna be for you over time. This information right here is gonna help future lenders analyze your situation a little bit better because it'll help them determine the likelihood of you paying back that loan. So, in conclusion, student loans can actually be a blessing in disguise because of the way that is reported on your credit report can have a huge influence and effect on your credit score and how lenders view you at the end. If you love this video, let me know what you think about it in the comments below. Don't forget to like, comment, subscribe, share with family and friends, and until the next episode on Keeping It Real with Credit, peace.